Welcome to the Stage Analysis Members Midweek video. It's Wednesday the 15th of June and we've got a bit of a packed schedule for tonight's video. Just flick back through. So what have we got? So we're gonna obviously got the post partially ready, so I thought it'd be useful to use this as a quick guide of what's going to be on tonight's video. So I'm going to do a quick overview of some of the historical stage 4 declines in the Nasdaq. As I started a new series of posts yesterday, which basically covers all of the major stage 4 declines since the early 1980s. I'm going to try and get some data to go back further, as there was some obviously really interesting ones through the late 60s and 1970s as well. So it'd be good to get the data for those, but you can see those in the stage analysis book and how they formed. But one of the reasons is that obviously history often, it doesn't repeat itself, but it does often rhyme. So I wanted to have a look at how different stage 4 declines have formed over time and to see how they compare to the current decline that we're experiencing. So at the moment, we're obviously a long way in now into a stage 4 decline since the high. I think we topped about 30 weeks ago now, so I feel that'll be an interesting series. So I'm just starting off with that. So I just wanted to do a quick overview of that at the start of the video before going into the major indexes update. Then we're going to have a look at some of the mega caps that make up obviously the bulk of the major indexes weighting. So for example, Apple, Nvidia, Microsoft, Google, Tesla, etc. Quick look at where they are currently and how they're developing with what's going on with the Fed decision today. Potentially a pivotal point for the market, as often can form trending behavior following the Fed decision. So it should be an interesting one in the coming days. Little market breadth update, midweek update. So just having a look at the 1 hour bullish percent index, the percentage of stocks above their short-term MAs. Actually added in since I did this earlier, I've added in the longer term, the 20-year chart. So I posted that on the members post last night at the bottom of the chart. So it did reach some extreme levels yesterday, but it has come off a little bit today. So it's not quite as low as it was in terms of historical levels. It hasn't closed below the 10% level more than twice in the last 20 years. I think it was only in 2008 and 2020 that it closed below the 10% level, but it did reach below the 10% level yesterday in the Nasdaq. NYSE still stronger, but has dropped into the lower zone recently. So we're going to have a look at that. Some quick look at the new high, new lows as well, before getting into the watch list stocks in a little bit more detail that have come up recently. So a few groups that started to show signs of basing, but they're generally still in the weaker end of the market. So it's still not my favorite, but as you know, in order to obviously move into stage 1, we have to start developing bases within stage 4. So although the vast majority of them are still in stage 4, but they have been starting to develop bases. So quick look at those in a bit more detail and finish up with looking at the stage 4 declines in Bitcoin and Ethereum at the moment. Of those had a big acceleration in the last few days, but potentially might be reaching a short-term selling climax as we speak, as they're attempting to bottom in the last couple of days, with a few demand tails coming in and them hitting some not extreme levels, some significant dollar levels, with the 20k level in Bitcoin almost, and Ethereum at 1k. So we'll have a look at that at the end. Okay, let's get going. So starting off, I wanted to have a look through these major stage 4 declines quickly as a quick overview chart. I've done these up as a quick thumbnail chart of a grid of charts, just so we can see them all at once. So starting at the bottom down here, you can see our current stage 4 decline in the Nasdaq has been running for 30 weeks. I did this yesterday, so data is a little bit out of date on this one. This is from Tuesday, but not too much. Although we had a strong move today, we did consolidate a bit into the end of the day, so it's still in a pretty similar position. So comparable to other declines that we've had over time, you see it does look fairly similar to what we saw in the 2018-19, but has been a longer stage 4 decline. Nothing like the 2020 COVID smash, which only had a 6-week move from the high to the low, 32.6%. We have similar in percentage move at the moment, though, with almost 34% since the high, and it's much stronger in declines than the 2018-19 stage 4 decline there. We go back in time, so back to the start. I've done a bigger post yesterday on this 1981 to 82 stage 4 decline. If we flick through into that quickly, I can show you the full post in here. So the free members only got the first part of the post, but obviously the paying members got the full post, and we'll get obviously follow-up posts to this. So with the markup, a look at the daily chart, how the base structure formed at the end of the range. We had a bit of a spring type action in here. We started to form a lower structure with a spring and test, and then follow through. So phase C into phase D type action in this, and then we look at the follow on to that. You can see this is the weekly chart. You can see the entire stage 4 decline ran from the stage 3 high 64 weeks, so was just over a year in stage 4, and stage 3 and stage 4 with that one. So obviously the decline begins with the stage 3 top. I talked about the little head and shoulders top that formed in that, and how it was different to the previous in the first parts. We did have a little mini head and shoulders to begin with while it was still in stage 2, before obviously then forming a further head and shoulders top with a lower right shoulder that was much weaker than we saw at this point. So I discussed that in the post, but you can see this then went on to move out with spring and then straight up, and had a massive 100% move through the next year, through 1982 to 83. So I'm going to go back in the following posts in this series and have a look at each of the major declines and see how they behaved on multiple time frames, how they bottomed, whether it was capitulation, whether it was just selling exhaustion. For example, the 1984 low here, there's no capitulation there. It's just a little exhaustion move, a little bit of an undercut of the range before moving back out again, and then this formed up a new range in here, and then started to move up and up back into stage 2. 58-week decline there. We've had some shorter ones of only 11 weeks in 1987, 86 there. Then the 1987 crash obviously was very short, only 9 weeks, and that did have a capitulation low. As you can see, looking through these, the vast majority of them don't have capitulation lows. They do. There's a few that did, but there's a lot of talk about that at the moment, that we need to see capitulation to end the stage 4 decline. But as you can see, if we do look back through these, and when I go into them in more detail, I think from just quick observations of these, that the vast majority of them didn't actually finish with a capitulation move. They finished with more of an exhaustion move before suddenly rallying back up again. And the vast majority of them did have V-type bottoms. They didn't form bases on the bottom, so they don't move in the same ways. Indexes don't move in the same ways as the individual stocks, forming big base structures. They tend to bottom with much more regularity with these V-type bottoms, as the individual stocks are doing the base building for them. So, and it's once the large cap stocks start capitulating and moving down, by that point there's normally quite a lot of bases already built in some of the names that have moved earlier. Okay, so let's move on from that. As I said, you can find the post in the blog at the moment for this one. This is the first of the series, so it's called Stock Market Studies, Bear Market Stage 4 Decline in the Nasdaq Composite 1981 to 1982. As I said, I'm going to do a bunch of these and do the same for the bull markets and various other studies as well over time. So I think it'll be a good little series and feature for the blog. Right, let's move on to the major indexes next. So today was the Fed decision day. They raised rates by 75 basis points. So as widely expected, really, but the market reacted with the usual intraday volatility. If we look at it down on the 2-hour time frame here, I can actually zoom in on this a little bit more. It's probably better on a much lower time frame. You can see the initial reaction, spike up, big move down, a huge move up again, then before finishing out, pulling back in again. So very much the day traders having fun in there during the day, but not an awful lot of actual information in terms of whether it direction wise for tomorrow, as the bar obviously consolidated with a very tight body in there at the end of the day in that last 2-hour bar on heavy volume. So still remains on an intraday stage 4 decline. On the daily chart, we still remain in stage 4. You can see percentage of stocks above the S&P 500 in the 20-day moving averages. It ticked up a little bit, but it's at a very, very low percentage rate of 3.2% at the moment. So it's come off a little bit, but still exceptionally low. So we're looking for, in order to get a buy signal with this, you look for a move back through the key 30% level, and ideally a much stronger move than that back into the middle upper zone, so through the 50% level and higher. So for a short-term buy signal on that. But with it being so oversold, could potentially, if it starts to move up by a significant percentage amount, 6 to 10% within the lower range, then potentially we'll have a bull alert signal on that. But we'll use lower time frames to look for shorter term signals than that one. But as I said, at the moment, we remain in a stage 4 decline in this one. We're still underneath resistance. And S&P 500 has dropped off over 20%. So we did start getting the headlines from the financial news the other day of that we're now in the bear market, which, as we've talked about previously, is obviously ridiculous. We've been in the bear market for a long time now. So, but obviously, once you start getting the headlines like that, you get magazine covers, etc. It's highly likely why we'll get a rally at some point very soon, because of the mainstream now cottoning on that we're actually in a bear market many months after the fact. So we look at the Nasdaq, similar to the S&P 500. It attempted to move back into the range that formed during May, where it had that little rally move back up above that 21-day moving average, still a long way below the declining 50-day moving average here, and closed right just at the edge of the range. So potentially showing a sign of weakness there. But obviously we'll see what happens tomorrow, whether we get any follow through or not. We're what we got there, 11% up to the 50-day, and still 27% below the 200-day moving average. So we could have a 27% run up to the 200-day moving average. Pretty much still highly likely still be in stage 4 at that point. But we could have a huge bear market rally, and obviously the individual stocks would be breaking out into stage 2 during that point. So we could potentially, even if we do get a huge run up towards the 200-day moving average, we could still remain in stage 4. Look at the Russell 2000 here, attempting to hold, showing a little bit more relative strength in the near term here. Talked about this recently, that it has shown better relative strength in the near term. Obviously had that capitulation type selling within the range. We had the gaps that didn't get filled on all of the indexes in the last few days. Hadn't seen that kind of behavior since early March in 2020. I looked back through multiple years of charts, and there wasn't many times where it happened in the past where we'd had two gaps in a row. So this, as I said earlier in the video, when we talk about capitulation, you might actually not get it right at the bottom. We might actually see the liquidation, capitulation, selling earlier on in the downtrend, at which point we then start to get exhaustion further down in the trend. So at the moment, this holding its range, still within a lower range. It's been in stage 4 longer than the S&P 500 and the Nasdaq. So it's in base 2 of the stage 4 decline. So this was base 1 down here, and this is the obviously base 2 that's developing. So we've got a little bit of spring type action developing. So we'll see if this can start to continue back through tomorrow and start to fill some of these gaps and challenge the 21-day moving average and declining 50-day there. So still 8% back up to the 50-day and 20% back up to the 200-day. So plenty of opportunities for a bear market rally, counter trend rally at the moment that would still keep us within the stage 4 decline. But at that point, if it does show a change of behavior, then potentially could start to move into stage 1. So VIX came off a bit today, but still remains in the upper zone. Needs to get down below this 200-day moving average, so back into this lower zone to turn back into a more positive environment for stocks. At the moment, still in a highly volatile state, so remains in a difficult environment